So Ian, you mentioned that the return in 2024 was 29.38%.
Yes.
So I want us to actually transition to the fact sheet, because a question I've received, several questions I've received have been around the return.
Yes.
And, sort of saying, oh my gosh, that's such a huge return. Is it real? Are you guys faking this thing? Have you manufactured it? And so on. So I want us to discuss now where this return came from.
Okay.
Yeah.
Okay. I'll take you to the back of the page where we have asset profit contribution. And having several people ask that question, you actually want to change the format of our fact sheet going forward to even say our holdings, so that people can be able to see where we've placed our money. But overall, even before I decipher the asset profit contribution.
By the way, I love that. Sorry.
Yeah.
Yeah, because it's good to just be transparent and show guys, this is how we did.
True.
And this is where we're investing.
Yes.
So yeah, carry on.
I want to say about 60 to 70% of our assets are actually in very safe assets. So you'll find them in either government securities, whether they are sovereign bonds or local bonds, and you'll get them in placements, whether placements are for margin or they are direct placements in banks.
And maybe placements for margins would be?
For derivatives.
Okay.
So they are earning interest, but they are allowing us to trade other commodities. Or they are basically security just in case whatever we've traded goes against us in any way. So 60 to 70% are actually money in safe assets. I'll call them more or less safe assets. And 30% being skewed to now what I had described as leveraged assets. So leveraged assets will be from OTC trades to derivatives to maybe contracts for difference, all those. But what is the contribution? The contribution sometimes is not directly, it's not a straight line from the amount you've placed versus what you get. Because placements ended up bringing about 22% of the total profit that we earned for the whole period of 2024.
Which is really interesting, but that's because interest rates were really high.
Yes.
Last year.
Yes, they were really high. Then they came a bit down. So if you combined basically the placements and the sovereign bonds, the two, you'll get about 44%. So 44% of the income came from, let me say, placements and interest-bearing instruments. The rest of it, you'll find them are more of, majority of it being on the leverage items. So derivatives and OTC trades, that brings 28%, and also trading currencies. Trading currencies was actively both on one and what we call leveraged products like CFDs. So that one really boosted our returns. Also, to some degree, we also were able to make money in equities, the local equities. And we are getting into the foreign equities, that is US shares, and maybe later in Indian stocks, maybe later.
What is your most disappointing asset class last year?
Wow, that's a hard question. That's a hard question because we had currencies that were asset classes that were quite volatile. That really helped us sometimes and sometimes really disappointed.
Okay.
One of it being CFDs, which we've really worked on managing so that they can be more steady. And they're the ones that actually sometimes helped us, like last year in March, where you saw a big gain in a single month. However, I can't really say there's one major disappointing. The one I would say is one of them being part of the derivatives, which contributed to the others, was the cost of having the counterparty being too high. It was actually not the trading that was hard, but our volumes were quite low for the capacity that the counterparty needs. So the charges for using the counterparty were quite higher than the profit that we are making.
Oh, interesting. Okay.
Such that we ended up with a loss, not because we are not trading properly, but because our volumes, and that's why we are celebrating the billion, so that we can surpass that and be able to do the volumes that we are supposed to do. That's what I would say.
Okay.
Yes.
So now when we look forward into 2025, what would your projections be for the year ahead?
Actually, that question has been asked by several people. Some of them saying, are you maintaining, the first question is, you did 29%, will you sustain the 29%? Others have said, your target is 20%. Are you going to revise your target? The answer as at right now, first, 28% is what we achieved last year, but our target remains 20%. We know that interest rates have really dropped.
Significantly.
So on placements, we are likely to place less unless we need to, because the return is quite low. However, we are using that chance maybe to become more active on trading. Trading, especially in government securities.
Yeah, when interest rates are coming down, it's quite exciting, actually.
Exactly. And that's where we can easily get capital gains rather than just looking at placing money and just waiting for coupons or interest. So we can be able to create instances of capital gains. So that's something we are really looking into. All the same, because we've increased our assets under management, we've been able also to expand our team. So we are bringing in more people with different expertise to expand what we are exposed to.
In terms of the asset classes?
In terms of the asset classes. And also looking at people who can at least do higher than normal returns on specific asset classes. One of them being US shares. People who are able to trade and give returns of over 30%. Those ones will boost maybe placements that are at 15, 14, 10%. They are able to be boosted. Even 9. Actually, right now, you call for a call deposit, and I think the best right now I'm getting is 9.75. And it regardless of the amount, and they are very serious. So that's what we are looking into. So for now, we still stick to 20% as the targeted return. Unless otherwise, we believe we can still do it.
Okay.
Yes.
Awesome. Thank you so much, Ian. And please subscribe so that you know what's going on. Most importantly, I think you need to become a client. It is amazing. Like literally every month you get a statement and you see just ka-ching, every month your returns are, credited to your account, and it's fantastic. It's just making money while you sleep, which is what we want to discuss next. So please subscribe and share these videos. Take care.